We are back to earnings. The other stock in focus yesterday was Thermax. The numbers were very strong for the second quarter. There was growth on the top line. In fact, if I pull up the numbers, 28% growth at the top line level. EBITDA was up about 37 to 38%. And not just that, the order flow and the execution also improved. Ashish Bhandari, Managing Director and CEO of Thermax, is with us to give us more color on these numbers. Ashish, thanks very much for joining in. Good morning. Season's greetings to you. So my first question actually is on the order book, where you have seen, I think the numbers tell us, around a 25-26% growth in the order book itself. Tell us where these orders are coming in from, which of your segments are showing maximum promise, and if you could crystal ball gaze into the future. Everybody wants to know if the CapEx cycle is really picking up. Do you get that sense?
Sure, and thank you very much for having me on today, and big good morning to all your viewers as well. I've been saying for the last 2 or 3 quarters that it feels like the V-shaped recovery is real. It's the numbers that we were getting, which was broad-based across multiple segments, were showing good recovery. I would say this last quarter showed that we have actually moved up a gear from what was a V-shaped recovery, which means that as a baseline business, and our orders this quarter are a good example, where we did more than 1,800 crores with not a single order that was more than 300 crores, which means that the base business itself is getting to this 1,500 crores kind of a level, which is across multiple segments. Right now, we see strength in cement and steel in particular. Many of the refining and petrochemical projects that had slowed down during COVID are also coming back. Many of these are with government entities. And then the food and pharma, which started off strongest after COVID, there is some slowdown, which means it's not as active as it was a year ago, but there is continued strength. So I would say in my time with Thermax, which is now getting close to 2 years, this is the broadest based order book that I have seen.
Okay, that's great to know. This is the broadest based order book. Can you tell us about how much you will be executing in FY22, and what does this mean in terms of your revenue visibility for both FY22 and FY23?
See, I think FY22, this was the first quarter I can say that on an execution basis, we did not have any impact from COVID. So, which is very good. Yeah, but I think we know that the story can change, as it happened with the wave 2 in a heartbeat. So I will not like to share any future projections, but if business continues uninterrupted, our ability to work our backlog will also increase significantly. We still have capacity, we still have capability to deliver. And right now our backlog is quite significant. It's time that on the revenue side as well, we start to catch up in a way that we have on the orders side. The big concern in the environment right now is our ability to deliver from the commodity side. Steel in particular has seen a big increase. It's impacted our numbers considerably in Q2, will continue to impact in the foreseeable future as well, because there are more steel price increases that are coming. Diesel fuel prices have gone up. Labor prices are starting to go up. International shipping prices, commodity prices, especially for a specialty chemicals business, finding containers and finding containers at a price that we have committed to our customers, both of them are very, very difficult. So I would say limited impact from COVID, quite a bit of impact from the broader commodity price increases.
Sure, yes, those are some very real challenges for you and for many companies actually. But just to get back to the element on the top line, you're saying that now you want execution to pick up so that the revenue growth reflects the strength in the order book. Can you give us some more detail on this? What is a typical pace of execution, for instance, that you have traditionally followed, and by how much can you scale it up? And the current order book, it's to be executed over, what, 1 year, 2 years? So how should we expect that translation to revenue to play out?
I think this current order book that we have is a very good, healthy mix of long-term and short-term projects, which means you have about half our order book, which is here, should get executed within this year. A remaining half, which will continue on into the next year and beyond. Most of it should get executed between this and next year. I think in terms of projections, historically, we haven't shared future-looking projections, and I wouldn't want to change that now. So I think the analysts understand our backlog reasonably well, the quality of the backlog. My focus is more on executing that backlog and clearing it. Yeah.
But in terms of sectors, you've said you've seen strength in orders from cement and steel. But last time around when we spoke to you, you had also indicated that FMCG, pharma, chemicals are also picking up quite a bit. Any more color that you can throw on that?
I would say this particular segment, this particular quarter was stronger towards cement and steel, which steel in particular, the first few quarters after we all came back from the first wave of COVID, the demand on steel was good, but the investments were a little delayed. Cement also, the investment started to happen slightly later on. But now in both of those sectors, the investments have picked up. Yeah, on the refining and petrochemical, as I had said, many of these are government projects, which the projects we knew would come back, but the decision making had slowed down because of the first and second wave. They are also coming up for decision making, and we expect our order book to be reasonably strong, at least for the next 3 to 6 months as well. We see deal activity, orders and inquiries at a reasonably high level. Food and pharma, they were the first to start, but there we see a little bit of, in the sense that growth is not to the extent that we saw maybe a year ago. Yeah, that's how I would put it. They're still very strong, but not growing to the extent that we were seeing them grow, which is expected. Yeah, the food, pharma, chemicals were the first industries that started up after the COVID wave, and they all had capacity issues. They all had to invest.
Yeah.
Last thing I would say is both in cement and steel, the biggest kinds of investments that we are seeing are around investments that are related to green and relating to cutting down energy expenditure in these industries. So they are all around waste heat recovery, taking current processes and making it more energy efficient.
Sure.
And those are all challenges typically where Thermax does well.
Absolutely.
Yeah, so these are all through interactions with the customer.
Oh yeah, absolutely. I think that is perhaps a path that we will see most companies go down, sort of to improve their ESG quotients as well. Perhaps that's another opportunity. Just a word back on the margin, Ashish, because you mentioned a lot of the concerns, including, of course, raw material inflation and the lack of containers. Now, in Q2, you managed to contain margins very well. Actually, there was a minor expansion at the gross margin level. But will there be pressure in the second half? If you could sort of guide for that.
I think there'll be continued pressure in the second half as well. Even in this first half, we have had to actually pass on 2 really big orders because we did not think the commodity price increases we would be able to pass on, because some of these, especially for government projects, you quote these projects maybe 6 months ago or 9 months ago, and they're now coming for conclusion. And we passed on because we did not think that these were risks that we could retire. What we are doing right now is, especially on many of these project kind of inquiries, is the point at which we quote and the point at which we release our risk relating to those projects. We are looking to shorten this period to weeks, if not even less. Even then, I think this particular quarter, we had as much as, in our estimate, 15 to 20 crores of impact just because of commodity prices that we could not retire. And our future quarters will also see that kind of impact, at least in Q3 and potentially in Q4. We are increasing prices, but you can't increase prices when you are on this treadmill where by the time you increase prices, you start to realize some advantage from those prices, and the market, the costs have gone up again. Yeah, so it's at constant treadmill right now that we are on.
Okay, well, who isn't, right, on a constant treadmill? Thanks a lot for joining us. And talking about the business, there's definitely been a pickup there. Order inflows are on the rise. Let's take a look at the financials of Thermax in the last few quarters. First up is the revenue performance of the company that will show up for you on the screen. There you have it. It's been a few challenging years for them. Next is the EBITDA of Thermax in the last few years. And finally, on your screens is the profit performance for Thermax. Just want to get our attention for a minute to the markets because the Nifty is still holding quite steady with a 100-point gain, which is not bad given the